The end of the monetary system as we know it is probably on the horizon. I think the transition or the lack of transition will probably be chaotic. I'll say what I think is going to happen.
Brent Johnson, CEO of Santiago Capital, is a much sought after speaker to discuss his well-known Dollar Milkshake Theory, which is a strong counterpoint to the idea that the next currency crisis will result in a weaker dollar. In this interview with Mark Moss, Johnson shares his take on weakening global currencies and what he believes is the Fed's real hidden agenda. Johnson goes on to predict exactly when he thinks the markets will bottom, what specifically will make the Fed pivot, and he makes some very bold statements about what the future monetary system could look like and be pegged to.
The Fed's trying to fight inflation. Part of keeping the dollar propped up or making the dollar stronger, then it helps offset that inflation that we're seeing versus other nations that are forced to buy oil with a devalued currency. But on top of it, then they're being forced, well, not maybe being forced, but like Japan is like trying to maybe prop up their currencies at the same time as they're having to import oil at these crazy levels, right?
Yeah.
So they're down to whatever.
At the same time that they're doing yield curve control on their bonds, which so they have a bunch of cross currents going at the Bank of Japan here.
Yeah. So you're obviously the dollar milkshake guy. The theory is that the dollar will suck up the liquidity from all the other currencies and be the last one standing. We're definitely witnessing that playing, but this is kind of all part of that, right? So as Japan is forced to defend it, I mean, they're going to continue to devalue, right?
So my thesis has always been that whether the Fed wants it or not, ultimately the dollar will get away from them to the upside. And the reason I say get away from them is I think currently they want a stronger dollar, and we should probably talk about that. But even I think that before this is all said and done, the dollar will go higher than they want it to go. And it doesn't mean it's going to go in a straight line, and there will no doubt be periods of dollar weakness along the way. Even though the Fed might want a stronger dollar in the short term, they don't want a dollar that's rising so fast that it's out of control, because that will literally wreck the entire monetary system. You know, the monetary system wasn't set up for a continually increasing dollar. It will literally cause the system to crash. So while they may want the dollar higher in the short term, I don't think they want it significantly higher in the long term. But ultimately, I think that will happen. Now, in the short term, I think that they actually do want a stronger dollar, because a stronger dollar right now accomplishes several things. And I think some of these things they would admit to, and some of them I think they would not admit to, and some others they may vehemently deny, even though really they do want it. But you know, right now, for better for worse, even though they want inflation, a small amount of inflation over time that allows them to inflate away the debt, they don't want double-digit inflation year over year. And the reason they don't want that high of inflation year over year is because that is very politically hard to handle. It causes too much stress in the local economy. It causes citizens to push back on business leaders, government leaders, officials, et cetera, et cetera.
Right.
So the government would love to get 3 or 4. They say their target is 2. I think they would love 3 or 4% inflation for 5 or 10 years, and they inflate 25 to 50% of the debt away. I think they would absolutely love that. The problem is it's very hard to get 3 or 4% consistent inflation. What you get is this, very lumpy, crazy inflation that we've had over the last, call it year or 2 years. And so because of the political pushback that they're getting, and because of what's going on in the global economy with all this inflation, they are trying to dial it back down. Not the least of which is their reputation, right? They don't want to blow up their reputation, and they're very embarrassed. The Fed, I'm talking about, the Fed's very embarrassed that inflation came in so high, and they were wrong on the transitory nature of it. And so they want to get it back down for a few reasons. They want to get it back down in order to restore their reputation, but they also want to get it back down so that the pushback economically and politically is less. And the way that they're trying to do that is by killing demand, right? They don't really have control over the supply side of the equation, but they think they have control over the demand side of the equation. And if you tighten monetary supply, which means you're taking liquidity out of the system, either through open market operations of the Fed or through raising interest rates, tighter monetary supply should lead to less growth, and it should push demand down. And so they're
let's just make everybody broke, and then nobody buys anything.
Right. Well, I mean, here's the funny thing, Mark. Well, it's not funny. It's actually tragic. But I think again, for better or for worse, I think Powell has been about as clear a speaking central banker as I've ever heard. All year he has come out and said, we need to get inflation under control. It's our primary concern. We're going to raise rates. And whenever the market has misinterpreted him, he's come out a few days later or a few weeks later and said, hey, I want to be clear. You guys aren't listening to me. I'm going to raise rates and we are going to have some pain. And that means that people are going to have to get paid less. They're going to have to lose their jobs and house prices are going to have to come down. And even though those are bad things, that will be less bad than letting inflation run hot. I mean, he's been very, very clear about it. Now, you might think he's lying. You might think that he's wrong. You might think he's misguided. That's fine, but there's really no confusion in what his words are saying. And so, I think that raising rates and getting the dollar stronger is what they are trying to do in order to get inflation down. Now, ironically, or unironically, depending on, I guess, where you're sitting, is that by trying to tampen down inflation domestically by raising the dollar, they're actually exacerbating inflation overseas. And what I mean by that is if the dollar is going up 10 or 15%, that means other currencies are going down 10 or 15%, right? And so if we already have high levels of inflation in the US, and now those same goods are even more expensive in euro terms or yen terms or Australian dollar terms or whatever it is, and it's causing those other countries to support their currencies because their currencies are losing value too much, and those other countries, in addition to trying to support their currencies, they're also trying to support their bond markets through some form of QE. You get into a situation where you're exacerbating the same issues that the Fed is fighting domestically are being exacerbated outside the United States. And I think we've talked about this before, but this whole situation, there's a name for it. It's called Triffin's dilemma. And Triffin was an economist back in the 60s, and he coined this term, and he said, if an individual country's currency is used as a domestic currency and simultaneously used as the global currency, at some point along the way, the needs of the domestic economy will come into conflict with the needs of the global economy. And that's literally right exactly where we're at. The rest of the world, because it trades in dollars and because the dollar is higher, their local currencies are worth less. It's making their funding costs higher. It's causing their economies to slow. And it's just a real mess, right? And so, we're right in the heart of this Triffin's dilemma where the US needs one thing and the global economy needs the other. And the Fed and the other central banks around the world are trying to thread this very, very small needle hole. The end of the monetary system as we know it is probably on the horizon. And whether that is successful or not successful, I think the transition or the lack of transition will probably be chaotic. We've not only kicked economic problems down the road, we've kicked social problems down the road, we've kicked political problems down the road, we've kicked geopolitical problems down the road. And the other thing is it's not just us. Like, Europe's kicked all these cans down the road, and China's kicked all these cans, and Japan and Australia, all of these countries have kicked all these cans down the road. And now I feel like the whole world is converging on this intersection. And this intersection is just filled with cans.
Now, when we talk about all these currencies losing value, the euro, the yen down 20%, you mentioned Turkey, the Turkish lira is down 80 to 90% over the last 5 years to the US dollar, right? So if you look at the Turkish lira over 5 years, it's down whatever it is at this point, 80 to 90%. Other currencies are down, whatever amounts they're down. Argentina's down more probably. But that's all compared to the dollar. So your theory, the milkshake theory, is always the dollar is getting stronger, which it is, right? But it's getting stronger to other currencies. But if we look at the same 5-year period, the dollar's down 68% to the S&P 500. It's down 48% to median real estate since January of 2020. The dollar is getting stronger to currencies, but it's also getting weaker to assets at the same time. How do you think about that?
And that's that is kind of the theory. The dollar milkshake theory has never said you should just buy dollars, leave it in cash, and just sit there and buy everything when it's really cheap, right? The theory has always been that we will ultimately get into a situation where the US dollar and US dollar denominated assets rise versus the rest of the world. So, I've always said that we'll get into a situation where we will have the dollar, gold, and the Dow all rising together. and potentially U.S. real estate too. That is a situation where maybe everybody's printing, maybe the whole world's doing QE, including the U.S., but all of that money that's being printed comes into the United States. It goes into stocks, it goes into gold, it goes into houses, it goes into commercial real estate or land or whatever it is, right? And so you get this situation where equities are going higher, land is going higher, gold is going higher, the dollar is going higher, but those assets are going higher versus the dollar, but the dollar is going higher versus all the other currencies. I mean, that's ultimately what the milkshake is. I don't think that people should just be sitting in cash.
So just using the dollar as your unit of account, your measuring stick.
Yeah,
kind of.
exactly. And the U.S. market as your safe haven.
It seems like right now the Fed keeps saying we're going to crush inflation, raise rates, but the markets are almost like calling their bluff because they look, we know you're committed, but if the whole system seizes up, you're going to be forced to change. So will the market seize up before the Fed gets inflation down? And so the markets are kind of calling their bluff. This is coming to this proverbial end. At some point, I think you kind of said the whole world's doing QE together and everything kind of melting up. So do you think this happens, maybe the Fed hits that proverbial wall in the next 12 months? Then over the next 3 to 5 years, we QE melt up together.
Yeah, so I'll make a prediction. And here's the funny thing is a lot of people say you should never make predictions because, you can never get the time.
Just probabilities.
The thing is, the reason I don't mind making predictions is I don't mind being wrong. I mean, our job is essentially to predict the future and then put assets in a way that's going to benefit from that, right? I can't think of anything more arrogant than to think that you can predict the future with perfect accuracy.
Sure.
So I'll say what I think is going to happen, and if it doesn't happen, that's going to be fine. I promise you I will get through it. But my thoughts is that we will probably make a new low sometime in the first quarter of next year. And then after that, I think the Fed will pivot. And what exactly the pivot means, whether they just slow hikes or stop hikes or go back to, I don't know. But I think a crisis will be required to pivot. I don't think that they are going to pivot when inflation is still high, unemployment is still low, and asset prices are still higher than they were in March of 2020. I mean, that's what you got to remember, right? Like markets are down anywhere from 15 to 30%, this year, but they're still up 30, 40, 50% from where they were 2 years ago, right? So the fact that asset prices have come down a little bit, I don't think necessarily bothers the Fed. So
I would agree.
Will the Fed pivot? The Fed will absolutely pivot because that's their job. The whole reason that central banks are in existence is to step in and save the system when it comes under threat. But they're not necessarily put in position to save the market when it's not needed. Yeah. And for all those reasons I talked about earlier about him being embarrassed and they got inflation wrong and they need to protect their reputation, I think necessitates the crisis before they come back in. And so, when I see markets the way they are up today, I understand why they're up, and it makes sense to me why they're up, but I don't think it's right. I don't think the market's making the right decision.
Right.
I don't think the Fed has already decided to pivot and they're going to pivot next week. Now, if they do, and I'm wrong, that'll be fine too, right? Like I'll just have to react to that and deal with it.
Your reasoning is right. The timing could change, but at some point,
exactly.
And it could break sooner than you think. It could break next month, right? Like we could run out of diesel. Like, who knows, right?
I mean, markets are just really psycho right now, and I think anybody who has certainty in what's going to happen is a fool because nothing is certain right now.
I want to just jump back to the last part, which kind of shocked me. Another fiat system on the back end. And the reason why that kind of shocks me is there's a theory, I forget the guy's name, what it's under, but it basically says that theory value of money or whatever, right? Where so like when Zimbabwe blows up their currency, they create a new currency that's pegged to the dollar again. And then they blow it up again, they repeg it to the dollar. So they have to create a new currency. It has to be pegged to something of real value.
Yeah.
And the dollar was created based off of a peg to the gold value. So how do you create a new fiat currency that's not anchored to anything?
Okay, so the way I would describe this is two things. Even if they don't peg the new fiat system to something, that doesn't mean that gold won't go to $5,000 or $10,000. So I'm a huge gold bull long term. I think whatever the transition to a new system, I think we'll see gold be much, much higher than it is today. So, but that doesn't mean that it will be officially recognized as money. The other thing is, it wouldn't shock me if they use gold as part of the new system or in some way use it to restore confidence in the short term. But I don't think we're going back to a situation where we will have a standard gold standard, and that is used as the global money, and the whole world just agrees to it. I think if anything was chosen that the whole world would accept, it would be gold. But I just don't think whoever wins this grand battle is going to do that. The other thing I would say is, it doesn't have to make sense for something to last. And what I will use as an example is, the Russian ruble after World War II, right? The Russian ruble and the whole Soviet economy from 1940s to the 1990s was nothing to be excited about, right? It didn't do a good job of protecting purchasing power. Their economy didn't thrive. There was no free market principles there that guided its value up or down, but yet it lasted for 50 years because the Soviet Communist Party said, this is the way we're going to do it, right? This is the rule, and if you don't follow the rules, you end up in Siberia working in a labor camp for 40 years.
Yeah.
And my fear is that could happen again. Again, I don't want that to happen. That's not what I would choose to do, but the idea that we're going to have this big grand battle, and then after that we're going to have peace, love, and harmony. I love the idea, and I hope that happens, but I'm a little skeptical.
Well, I'm rooting for peace, love, and harmony, but
I am too, man. We'll do it together.
Yeah. All right, cool. The Bitcoiners' hope is that it places restraints, right? So if I was having a party at my house and I started kicking everybody out of my house party, I've lost control over them. They've gone and started their own party, and I no longer have control. And enough people opt out of, that's what happened with the fall of the USSR. Enough people opted out of the economies, created black markets, parallel markets, and then the USSR lost control, which is why nations always impose capital controls at the very end. They have to keep people stuck.
And that's why black markets have always existed, right?
Yeah, so it's like and even we've seen Christine Lagarde talk about that. We have to close the exits, she says. And so if enough people can get out of their system and into a new system that they can't control, then they just lose control. There's no way to get it. Now, threat of a gun, right? They have monopoly on violence, I suppose, to your point, and people would say don't underestimate the amount of violence they'd have. But I think that's the hope, is that maybe there's a way that people can go get into a new system that works, and there's no threat of violence, but we'll see.
Yeah.
Click this video to watch Max Kaiser reveal how the British economy is collapsing and how the elite are abandoning the existing world order.